and gentlemen, welcome once again to this show. Here today we have with me Caleb Wheeler. Caleb is with Prosperity Mortgage.
Absolutely.
And Prosperity Mortgage is it's a division of Abby Holiday.
Yes, sir.
And they're over here doing wonderful things. Things and loan programs that they have, you would not believe. I'm really excited to bring him here to y'all so that y'all can learn about some of the interesting programs that they have. Things like a zero down loan program, which is unheard of for just ordinary people. So as an ordinary people, you don't even have to be a doctor or be, somebody in that capacity, but you can qualify for a zero down, which is unheard of. So I'm excited to have him here to join us and just talk about, a little bit about loans and mortgages, and also talk uniquely about what Prosperity Loans has to offer us.
Absolutely. I'm glad to be here, so I appreciate it very much for having me.
I'm glad you're here. Can you tell maybe my audience a little bit about yourself and then about Prosperity Mortgage?
Absolutely. So my name is Caleb Wheeler. I'm with a senior mortgage consultant with Prosperity Home Mortgage. I've been in the mortgage industry now for 15th year going. We are very, very excited to be able to offer a lot of new programs that are available, some that are specific to only Prosperity here. We are a nation-based company, so we have mortgage consultants all around the country that can refer out and refer in, and to be able to help people that are moving not only within the state of Texas, but also from around the country. We also try to be able to help clients fit into programs that best fit their financial needs and profile, to be able to get them not only into their dream home, but to be able to make them excited about the process as well.
Oh, wow. That's exciting. I didn't know y'all were nationwide.
Here we are, yeah, absolutely.
Oh, wow. So I can refer out the lending part to y'all.
100%. We can be able to refer them out to a mortgage consultant that is in the area that they're relocating to.
Oh, wow. Okay. That sounds great. So let's start with our first question here. Tell me, what makes anybody an attractive borrower? What fits the profile or frame of an attractive borrower?
So an interesting question. So, that gets kind of deep when it comes to what makes an attractive buyer or a borrower.
Yeah.
We want to make sure that every borrower is treated the same.
Mm-hmm.
We're going to make sure that every person is credit approved, to make sure that their financial profile meets the criteria that we're looking for in the financial program that we're going to try to put them in. Ultimately, it's going to be the client's decision as far as what program and which route they would like to go. But what we look for as far as in an attractive borrower is any borrower. And the reason why I say that is because not every person has an 800 credit score. Not every person has a 580 credit score. So if you have a 580 credit score or to an 800 credit score, I'm going to treat you identically to the same. Okay. I'm going to try to, if you don't qualify at the particular time that I talk to you, we're going to try to find a way and a game plan to get you to where you need to be in order to make that dream of home ownership possible. If you have an 800 credit score, then we look at programs that could qualify you now. However, what we're looking for in a borrower is qualified income to be able to repay your mortgage whenever you take the mortgage out, where the funds are coming from for down payment and closing costs, and they can come from an array of different places. It could be checking, savings, money market, IRAs, 401ks, CDs, mutual funds, gifted from immediate family members, or even down payment assistance programs. So there are a lot of things that we look at as far as what makes you an attractive buyer. And whenever that question is ever asked to me, it's every person. Every person is an attractive buyer to me.
Whether they're ready now or later, they still qualify.
Absolutely.
Okay. I see. So my next question here is, how much should a person expect to pay in interest? Is there a general rule of thumb, or how does that figure into things?
So the interest that you're going to pay on a mortgage is going to be based upon the loan program and the interest rate that you're actually locked into. So whether it be an adjustable rate mortgage or whether it be a fixed rate mortgage, that could actually dictate what the interest that you're going to pay on the loan is. Is it an interest only loan? Is it a fixed rate mortgage where you pay the interest over a 30-year, 15-year, 20-year term? Or is it an adjustable rate mortgage where it's fixed for 10 years and then it's an adjustable rate after that? So that could be a variable, what they call a variable type interest. So the amount of interest that you pay on a mortgage majority of the interest is paid up front, so the first 5-10 years of the mortgage, and then it's an amortization schedule that actually lowers and lowers as you make your monthly payments. There is no prepayment penalties, so what you can actually do is make an additional payment per year and actually buy down to that interest a lot quicker than you could if you just paid the minimum payment.
I see. That is great. So it is important, or it is smart for somebody to come to you and say, hey, what do I qualify for, and how best does this loan program fit my needs, than just say, hey, I think I would like an FHA,
Right.
or I like a conventional, can you give me those? Right?
Absolutely. So we have a lot of clients that come to us and say, hey, look, I heard I need to do an FHA loan. And the first question I always ask them is why?
Yeah.
And they say, well, this is just what I've been told. So what I usually do is say, well, the first thing that we need to do is take an application from you, fill out the application. That does include pulling credit. So there is an inquiry in the credit report, but however, what that does gives us a full financial profile to be able to say, here are your options.
Okay.
And to be able to, so that way you can be able to choose the best option for yourself. And when I say choose, that way you know all the information regarding the different loan programs that not only Prosperity offers, but the government offers in general.
Okay.
So we want to make sure that you are fully informed when making the best decision for yourself.
Wow, that's incredible. That's incredible. Okay. So yeah, y'all heard it. Don't go to him or call and say, hey, I think I qualify for this,
Right.
Don't shoot yourself in the foot. Come with an open mind and explore it. The best thing is to explore what program that the government offers, or they offer in-house that best fits your needs.
Correct. Absolutely.
Whether and don't be afraid to tell them what your goals are. You want to pay it off in 20 years or 15 years, or you want a small interest rate, or you want to even buy down the interest. So come with an open mind and be open to learn and explore and find what best fits your needs.
100%. And even coming to me and saying, hey, look, I don't have a lot of cash to bring to closing for the down payment and closing costs. We do have the option to do what's called premium pricing. Premium pricing is where we actually increase the interest rate just slightly, but it also gives you money back towards closing, to where that can go towards your closing cost. So even if you get into that circumstance, yes, you pay just a slightly higher interest rate, but it gives you the ability to be able to get into that home now.
Oh, wow. So I guess, what is a typical interest rate like in today's market or currently?
So so that's really a tricky question, and the reason why I say it's tricky is because the interest rates change daily, and sometimes in most cases they change multiple times per day.
Wow.
And the reason why is because it follows the market. It follows the treasury bonds. It follows what's going on in the economy, especially last year with the pandemic. Rates were a little bit lower for a period of time. As things slowly open back up, as the CDC opens guidelines, we're going to start seeing interest rates increase a little bit, because we got supply and demand, and you also got entertainment coming back, travel coming back. So those are things that play into the interest rates. Also, you got unemployment numbers and people that are either working or not working. Those things also play into the numbers as far as what's going on with interest rates.
Okay.
How do interest rates dictate what you're going to get? And that's, again, going to be based upon loan program that you're looking at.
Okay.
It's also going to be based upon your particular financial profile. Your particular financial profile means your credit score, the type of loan program you're looking for, the type of home that you're buying, how long we have to lock the interest rate for, and if you're waiving or not waiving escrows. So there's a lot of things that go into an interest rate. And when I say, well, my friend got this interest rate, why can't I get this interest rate? Well, it's the same thing as you don't have the same DNA as someone else does. And that's the way I look at it, is no two people are identical.
Yeah.
Unless you're twins, of course. But no two people are identical when it comes to a financial loan for a mortgage. So don't go into it saying, well, my friend got this and then I got this. Come into it just knowing your financial profile is going to get you the best interest rate that's based upon your financial profile.
Yeah, you heard it. Don't make that mistake, because I get that a lot too. A client comes to me and says, hey, I think my colleague will make about the same amount of money. They got 2.35 on their interest rate. Why can't I get the same thing? And I'm like, wait a minute. First of all, I'm not a lender.
Right.
And second of all, I cannot work that magic for you. It's not like, we did dishing it out. I cannot dish it out. But first of all, talk to a lender. And when you come to them, these are some of the things that will make you understand that you're making a mistake, making an assumption in the first place.
100%.
Come in, you could even get better than them.
No, agreed.
You know, but don't just say, "Hey, they got this, so I need to get something similar."
100%. And that goes back to the reason for that is, like I said, rates change daily. So
Correct.
what that person got a month ago, 6 months ago, a year ago is going to be different than what it is today. And their credit score may be 2 points off, and that 2 points off can make a difference of an eighth in an interest rate. So you can't ever rely on someone else to tell you this is what your rate should be. It's going to be based upon what the market is dictating at that point to give you what your interest rate's going to be.
And you know, one thing people tend to do is to go to Zillow and come back and say, Zillow says this, Zillow says that. First of all, guys, you know, ladies, Zillow is not a lender, nor an agent. It's a set of, you know, algorithms that figure out what you put in and gives you an output.
Right.
Talk to a person, a live person, you know, who can do the smarts and give you what you need.
100%. I mean, and Zillow it's a good resource to look at pictures. And that's the way I look at it. It's a great way to look at pictures. I mean, and there are some resources where Zillow comes in handy, but like Lewis just said, I mean, talk to an expert, talk to someone that actually does it day in and day out, because they're going to be able to give you the information that's going to be different from, say, someone that you just talked to on the internet, or you have no idea who you're talking to. At least you can see a face with who you're talking to, and you can meet with them face to face, and that can make a huge difference.
Right. Different companies offer different programs, so you just never know. That's a good point. This follows me to my next question here. How many points does most interest rates carry?
So points,
Typically,
also known as discount points.
Okay.
Discount points are a way for a customer to buy down the interest rate. And when I mean buy down the interest rate, I mean you have an interest rate that is at 0 points, and say you have an interest rate that is at 1 point. 1 point is dictated as 1% of the loan amount, not as the purchase price, but as the loan amount. That is a way for you to buy down the interest rate, also known as prepaid interest, at the time of closing, to help lower your interest rate for the life of the loan. And what I mean by the life of the loan is if you have a 30-year fix and you have an interest rate that's at 4%, and then you pay it down 1%, 1% of the loan amount. It's not 1% of the interest rate. It's 1% of the loan amount. That could equate to an 8. It could equate to 0.25%. It could equate to 0.5% on the rate.
Okay.
So you pay that percentage, and it lowers your interest rate for the life of the loan. So that way, when you have a 30-year fixed, over a 30-year time frame, a 0.25% interest rate on a $400,000 loan or even a $500,000 loan can be quite substantial. That's why, again, when I talk to customers about locking in an interest rate, I'll quote you at 0 points. I'll quote you at just a little bit points, and then I'll quote you usually at about 1 or 1.5 points. And if we want to go further than that, we can go further than that. But what I look at is what is your break-even point? Because really what you want to look at when you're buying discount points is when you pay the points to what your payment reduces by, you have to look at what your break-even point is to see if it even makes sense. Because if you're only going to be in the home for 2 years, and the break-even point's 4.5 years, it really doesn't make sense to buy down the rates.
Okay.
Yeah.
Wow, that's a very, very important point you just made. I mean, clients talk to me about buying down the interest rate, but they don't go in depth into it. And I don't think, I've talked to a lender who has really broken it down like this.
Every time I try to make sure that my clients are fully informed, like I said, and make sure that they can make the decision, because I'm never going to go to a client and be like, you have to pay these points.
Okay.
I'm going to go to them and say, hey, this is how much it costs.
Yeah.
Here's what your break-even point is going to be based upon what your payment's going to reduce by. Is this something you're interested in? Or how long are you going to be in the property for? Because if it doesn't make sense, I'm going to give you my expert opinion. But again, it comes back to you to make sure that you understand so you can make that decision for yourself.
So at what point in the process do you think the person is ready to talk about buying down interest rate, buying down points? Is it after they get the pre-approval? Is it after they get into contract? Or is it right when they're about to get to closing?
So I would not suggest it before closing. It's not at pre-approval. I think it really is at the time that you go under contract on a home. Okay. And again, the reason why I say that is because most people, on average, get pre-approved about 30 to 90 days prior to them actually going under contract on a home.
Right.
And the pre-approval process, which we'll get to later, is good for 120 days. So when you're talking about talking about interest rates, yeah, absolutely. We'll talk about rates at the time that you go get pre-approved with us. But the time that you really want to talk about buying down the interest rate and what it makes sense to do it or not do it is the time that you go under contract, because that's what the rates are doing at that time when you're locking.
Okay.
The rates of what we're talking about at pre-approval could change the next day.
I see.
So we really don't know.
So essentially, once you get into contract and before you lock the rate.
That's correct.
Okay. Okay.
And when you go under contract to locking in the interest rate, I would strongly encourage to try to lock it within 24 hours of execution of contract.
Really?
Because right now, with how long appraisals are taking, surveys are taking, getting the approval process completed, we're trying to close you quickly and efficiently. I understand shopping from lender to lender, which is completely your right and your choice.
Yeah.
However, my strong opinion would be if you're working with me, I promise you're not going to be disappointed. It would allow you to be able to get you locked in, start the process, get the appraisal ordered, and get the ball moving forward.
Oh wow, wow! So how soon do y'all request appraisals?
So it depends upon the closing date. So
Okay.
if you have a closing date of 30 days plus,
Yeah.
I mean, we can wait a little bit, maybe through option.
Okay.
But if it's less than 30 days, we're ordering appraisal on day one.
Okay.
And the reason for that is because appraisals right now are taking about 10 to 12 days to get back.
Oh wow, wow! So if you are following, if you're trying to figure out what an appraisal is an independent verification of the assessment or value of the property
That's correct.
by the bank or the lender to make sure that they're not borrowing you more than the value of the house or maybe less. But it's an assessment, so they do that to make sure that their money is safe and it's not being thrown away.
Correct.
And yeah, but the problem is that appraisals are taking longer because of the market. There's so much volume and business in the market right now that appraisals are just slammed with work. And
That's
so
correct.
you got to talk to a lender who can get all these things done and definitely guarantee your closing. So you don't want to wait too long or talk to the wrong lender and come find out you had plans to move in on by Christmas, but in actuality you're moving in
Middle of January. Yeah.
You know?
But the biggest thing that you got to run into there is the difference between a local lender and an internet lender.
Okay.
A local lender like ourselves here at Prosperity, we're based in Plano.
Yeah.
So we use nothing but local appraisers. So allowing us to be able to get the appraisal ordered allows us to be able to have quicker turnaround times than say if you have someone that is an internet lender or is not based here in Texas. They can have a longer turn time on appraisals, and those appraisers may not know the market that you're buying in.
Correct. Very true. Very true. See, we bring you nothing but the best.
Mm-hmm.
Mad information. Good information too. So, and I think this is the meat of it. What type of loan programs do y'all typically offer?
So we do offer the standard loan programs, which would be conventional financing, jumbo financing, which is also known as non-conforming loans, VA or veteran loans, USDA, which is rural-based loan programs only in rural areas, FHA loans, which is the Federal Housing Administration, which allows us to be able to have 3.5% down